Welcome everybody to my video channel. This time around I would like to take the opportunity to cut through all of the noise, all of the clutter, etc. that is out there when it comes to financial planning. And I want to boil it down to the 5 key characteristics and the 5 key learning points that we all collectively should adhere to in order to make our own lives a lot easier and also a lot more successful when it comes to planning for our own personal finances. Now, those 5 key characteristics are: number 1, risk versus reward; number 2, the habit of consistent accumulation of wealth over your lifetime; number 3, diversification; number 4, patience and the ability to think for oneself; and finally, number 5, emotional detachment from all of the crazy hecticness and noise that is out there in the marketplace. So without further ado, let's address number 1, risk versus reward. Now, if you do want to have higher rewards, bottom line is you also need to be able to absorb a higher level of risk. There is no free lunch out there, so as long as you determine your own personal ability to absorb risk, basically your propensity towards accepting risk, you can also then basically determine what type of rewards, as in what type of growth rates you can be expecting. The second thing is the habit of consistent accumulation of wealth throughout your lifetime. Make it a habit to sock some stuff away, to save, to probably also invest with your savings in order to get the rewards up a little bit, but it needs to be a consistent habit. Because just only haphazard, sort of attempts, they never lead anywhere. Basically, it is human nature to procrastinate and to not, put up with all of this, oh yeah, I need to save, etc., etc. And then ultimately, once you're in your mid-40s or beginning 50s, it is, too late then to really think about retirement at that stage. Number 3 is the need for diversification. Under no circumstances should you ever put all of your eggs into only one basket. Now, I know a couple of people, right, they were burned and they say, you know what, I don't want to invest into stocks anymore at all because I was burned twice, etc. That's still okay, that is fine. We can exclude some of the asset classes, that's not a problem at all. But under no circumstances should we just rush, for, oh yeah, what, I heard from all of my friends that they became millionaires, when investing into real estate. So now I'm going to rush out the door and I'm going to buy 5, 6, 7 properties. That is definitely something that will lead to disaster, because literally you're putting all of your eggs into only one basket. And you know what? If that basket drops, your life savings are gone. So you need to diversify. Number 4, patience and also your ability to think for yourself. The ability to think for oneself is of utmost importance. And also having patience. Now, thinking for yourself is kind of hard, because the problem is we get bombarded by media, by TV, by internet, by publications, etc., that say, what, this and that and that and that, etc., etc. It's always important then to take a step back, to go back to the drawing board, to look at your own financial plan and to say, you know what, I am patient towards working towards my financial goals that I set out. But also I'm able to think for myself. I understand all of the investments that I have. I understand each and every single product to the detail that it requires, and I also understand why I picked it in the first place. And if you do not have that understanding, then probably you should not have even invested in this asset class or signed up for that financial product to begin with. If you don't understand it, don't buy it. But it's absolutely important to think for oneself. And number 5, the final key characteristic is emotional detachment from the noise and the craziness about the public media. Because one thing is for sure, the public media, TV channels, print media, internet, websites, etc., they only have one goal, and that is to increase their own viewership and people who subscribe to, the publications, or people who, the clicks that they get on the internet. Because ultimately, their business model is, I want to get the most amount of viewers so I can get the most amount of advertising dollars from all of the companies that advertise on my channel, in my publication, or on my TV channel. And so as such, their inherent interest is to basically captivate the audience with very catchy themes. And the easiest is to report on oh yeah, everything is going through the roof. It's we're increasing by 20%, 30%, 40%, 50% growth rate annually, etc. Or the other way around, during times of crises, overblowing the crisis as well. As in when Lehman Brothers went down, oh yeah, you saw a couple of the TV news shows that basically said it's the end of capitalism, it's the end of the world, we're going to go back to Stone Age, etc., etc. Now on both sides, this is extreme, almost, let's say, emotional bipolar behavior, and it's only driven by captivating an audience so that they can sell a lot of advertising. And so it is imperative to all of us to emotionally detach from all of this craziness and the noise, and coupled with the point 4, think for oneself, analyze the situation, and then, emotionally being detached from all of this noise and craziness, making your own decisions based on that. Thank you so much for tuning in. I hope that this was helpful, and I will see you in my next video. Bye-bye.